Good day everyone. Today I've decided to show you guys how I handle the market, or better still, how I analyze the market from the higher time frame perspective. And this particular video is going to help those that are swing traders, and it will show you how you can handle the market. Because if you can understand the higher time frame, then your profitability is coming closer. So I'm going to start now so that this video won't be long. Then this is 1 month time frame. As you can see, the market is bearish. You need to understand the direction of the market first. That's the first thing you should do. Anytime you open your chart, always start from the higher time frame. I know it's not a new thing. Most of you must have heard about top-down analysis. You understand that those that understand their top-down analysis very well, they do well more than those that just stick to lower time frame. That is why this video, I'm going to be moving from monthly time frame to daily time frame, so that you guys will understand how to analyze the higher time frame very well before you can now start talking of going to the lower time frame. So now, looking at this structure here, you can see that we are kind of bearish in this higher time frame. We've been forming lower highs, lower lows. You can see this. I can see this, the last breakout structure. So you don't need to do much. Once you're on your monthly time frame, just go straight to the last visible breakout structure to you. What I mean by visible, the one that, yeah, even a layman, a new person can know that, yeah, this is a breakout structure. So looking at this now, our last breakout structure to the downside was this. Once you find out your last breakout structure, then get the highest point that causes that breakout structure. It was here. This was the highest point that caused the breakout structure. And as you can see, price is kind of moving back to probably mitigate something, then continue downward. Now, after you find out your breakout structure and the highest point, the next thing for you is to find a point where you're going to sell from. And the point you're going to sell from is where we refer to as POI, or some people call it order block. Now, looking at this leg, this particular leg, this is where you choose where you're going to sell from. This leg here, you choose where you sell from. Now, you look for another block that has not been mitigated. If you look at here, we have a mitigation here. Then from that mitigation, we have an unmitigated order block, which is here. So price might probably come to this point like this. Price might do something like this, come to this point, then drop. This is what we anticipate. So, but mind you, this is monthly time frame, and as you can see, the pullback is coming, and price is now forming internal structure. And this is the last internal breakout structure that we've had from this monthly time frame, as you can see, meaning that price will keep going up until it mitigates this point here. Price will keep forming higher highs, higher lows, keep forming something like this until it mitigates here, then it's drop, then we target here. So since this is a monthly time frame, we can still be looking for buys. There are several ways you can keep looking for buys. If you want to stick to monthly time frame, good and fine, then we can actually kind of wait for buys. How I choose my point of interest is this. When I see the fair value gap, this is a fair value gap here. This is a fair value gap. Fair value gap is that gap between three candles. That's the fair value gap. Then I take the 50% of that fair value gap. I use this my tools to take the 50% of the fair value gap. Then I draw my point of interest from that 50%, cover the low of the candle. Let's remove this fair value gap that I draw. So this is exactly how I draw my point of interest. So what I will do is wait, be patient and wait for price to come back here and tag me in. Then I look for entry, then we buy. So now I don't want this video to be long. Let's move fast. Then after we are done with 1 hour, sorry, 1 month, we go to our weekly time frame to see how price is reacting. As you can see, weekly time frame is also kind of bullish. It has break this structure here. So expectation is that price, our expectation is that price kind of pull back here, then we continue going up, something like that. Then there's no much to be done on the weekly, since we've done most of it in the monthly time frame. Then now let's go to daily. Let's assume that we are swing traders and we'll be entering our trades on a daily or on daily time frame. So let's clear off this monthly point that we draw, but have it at the back of your mind that we are bullish and we are looking for buy until we mitigate this point here, until we mitigate this point, then we start looking for sell. So now we are looking for buy to come to this point. Now let's analyze the daily time frame. Looking at the daily time frame, the internal structure is also bullish. Look at this. You see a kind of breakout structure, price break structure, price break structure here, then come back again, break another structure. So this is our last internal breakout structure in the daily. Is this then once you find out your last internal breakout structure, the next thing to do is to look for where you're going to buy from, because you can't just buy from anywhere. You need to be logical in choosing your point of interest or your order block. Now, I told you my point of interest, I like choosing the one that has fair value gap. I take the 50% of that fair value gap, then draw it with the candle. Now from here, now we've seen our fair value gap. This is our fair value gap here, from here to here. That's where our fair value gap is. Now for me to draw my point of interest, I draw from the 50%, then cover this candle here, the candle low. So I'll be buying anywhere from here. Normal, I'm supposed to wait for price to come to this point, then go to lower time frame. But since we are dealing with swing analysis, so let's assume that we'll be entering our trade directly from this daily point of interest. So what we do is, let's kind of put our position to like this. Then always be realistic with your target. You always target the initial high, that is the high that tags you in. Always target it like that. You have a very massive win rate, instead of just targeting something that you hope that price will come. Yeah, we know that price is coming to this point, but anything can happen. Remember, we still have a monthly UI to go down to, from here probably to go down to, then we go up. So that is why when you're targeting anything in the daily time frame, always be realistic. So let's see what price does. Okay, price is coming back to tag us in. Let's see if price will tag us in. Okay, now price has kind of pulled back, so let's place our target to this recent high here. This recent high, mind you, if price tag us in here and you enter on a lower time frame, the probability of you catching a very good rate, a good RR is high. But we are just assuming that we enter on the daily time frame here. That's why you are seeing a kind of a small RR here. So what we do is you wait for price to come there, and as you can see, price has tagged us in. Do nothing. You set your SL, you set your TP, just watch the price play out. So like that, you see, and as you can see, price hits our target. Like that, we keep following the price. Price has hit our target. Then let's wait for price to close. Let's see if price has closed above here. Okay, price has closed above here. That means we now have a new break of structure. Clean this one. Always make sure that your chart is clean. Clean this one, then we have a new break of structure. So I told you after a break of structure, the next thing to look for is where you will buy. So where do we buy from here? I told you your point of interest should have a fair value gap for you to always have a high win rate. Now looking at here, we have this fair value gap here. So I told you 50% of fair value gap. Then you come here, you draw your let's draw our where we want to buy from. Just draw it here, then put your position to. I told you always target, because this is daily time frame, always target, let your target be realistic. Always target that eye that tagged you in. Let's see if this will tag us in. Okay, we are tagged in, then our target should be here. Our target should be this eye. It's as simple as that. Then let's see what happened. Okay, we hit TP. As you can see, we've hit our TP. Like that, you continue. It's as simple as that. For swing trader, this is going to help your trading massively. You continue like that. As you can see, our TP, even though you see a lot of profit on the table, just be realistic with your target. Always target the eye that tag you in. Like that, you're going to have the high win rate. So let's do one more, because I don't want this video to be too long. Then we've already had a kind of a break of structure here. We've had this break of structure. Then our low, always choose the extreme point of interest. This is the extreme point of interest. We have a lot of fair value gap here, but this can just be a liquidity to come to this extreme. Then we choose this extreme point of interest. And remember, this is just internal structure, the overall, because if you compare this break of structure here now, this break of structure with this internal structure, you notice that it's very small. So it's very small. So most time, price might even sweep this low, use it as liquidity, and kind of target this point and use here now as a point of interest. So let's withdraw this and keep it here. So that means we have 2 points of interest now. Our first one is from this internal structure that we have here, this internal structure. This is our first point of interest where we'll be looking to buy from. So if it fails, then we take this second one, because price is still bullish and price might actually use here as price might use this point now as a liquidity, then come here, go up, or price come back here, tag us in and go. So let's see how it plays out. So right now we have 2 points of interest. Anyone that price pay out from, this is the first one, that's the first one, and this is going to be the second point of interest. This is how to kind of follow market and with a swing perspective. Then I told you always target that point that tagged you in. Let's see. Okay, we are tagged in on this one. That means our target will be here. It's going to be our target. So, but mind if that place fail, we still have our listing. Okay. Oh, we almost hit TP and it seems as if, okay, it fails, right? Fine and good. You don't win every time, but if you enter this trade, this particular one that tag us, if you enter it on the lower time frame, you know the amount of error you make to this point. So now this point has failed. Probably price want to use it as liquidity. Then from here we go. So we still leave our order on, our second order on. So let's see how it plays out. Okay, as you can see, price is reacting to it massively. And let's see how it goes. Okay, and that is it with TP. So this is exactly how you can follow the higher time frame, and that is the way you can use to increase your strike rate if you want to be very, very profitable in this industry. As you can see, price has formed another break of structure. So like this, you can still decide to follow the market. Price has not reached where we want to sell from. This is where we want to sell from. This is where we want to sell from. So price has not reached there. So we can still keep buying. Let's delete this. I like keeping my chart clean. Delete this, then let's look for another point of interest. So this is another point of interest. If you look at this particular new range now, this is our new trading range. You notice that we have a fair value gap here, kind of a fair value gap here where we can buy from. So if I draw my UI, I draw it from here. Then we now have the extreme one, which is this one here. This is the extreme point of interest. This is it. So we draw it out. We draw it out too. 50% of it. So, and always have it in your mind that extreme point of interest is always the higher probability. It's always the one that it will always work, because if it not work, that means price is going to, if price come here and this point now did not hold price back, then definitely price will change direction, and now you can start looking for sell. So that is why the extreme point of interest is always of high probability. And this particular one now, this why this particular one may fail, because if you go to weekly time frame now, let's check weekly time frame. If you notice now, weekly time frame, it's a sweep. So probably price, it's a sweep. Price did not close above here. So there's a probability that this first point of interest will fail and price will come down here, use here, then we use it and continue on. So that is why that first point of interest might not work. But let's still look, let's still play, let's assume, let's just play it out. Let's play it out. Let's put our entry. So mind you, but if it not work, we've already seen the reason why it will not work. Why is it then? Let's see how it happen. Okay, let's see as it's reacting to it, and as you can see, it fails. So we know that might fail because of that sweep in weekly time frame. Now we are only left with just one point of interest in this daily time frame, which is this one. So you can just set this limit. This kind of trade, with any trade you have just one point of interest, you can have rest of mind, because you know that once that point of interest, that extreme point of interest fail, then you know that it's not your fault. Market is just changing direction. So you can just set this one and leave it till you get tagged in. So let's see what price does. As you can see, we are not yet tagged in. Price is just doing what? Okay, now we are tagged in. So just be patient and allow the market to just play out. You've already set your entry, your SL, and your TP. So this is how, as most of you that know me, you notice that I trade Euro USD very well. It's one of my favorite pair. I just love the structure. It's well understandable. So as you can see, price tagged us in, and let me play this very fast. And it's almost at our TP. What's going on? I'm using my phone for this. So okay, and now price has entered our monthly time frame that we are looking to sell for, and at the same time daily is still bullish. So we are left with two choice: either to keep following the daily time frame or start selling from the monthly point of interest. But there's a logical way to follow this. You can actually be selling, but with the mindset that once price reach a particular POI on this daily, if you have a buy confirmation, then you still keep buying. So we have our, if you look at this is the low here, everything has mitigated. So we have our extreme point of interest here where we buy from. So do then draw it out, draw it out. This is how we draw it out. This is another point where we can actually look for buy. This point you can actually look for buy. That's if this point fail. Oh, I didn't draw my, there's a fair value gap here. So we draw it out. So this is the two point of interest that be interested or looking for buy. That is if price should come here. But mind you, we are in, when you will be more confidence in the sell is when this low go. If this low go, then if this particular low go, then we start selling with our target being the monthly time frame low. If that low go, then we can sell and target this point. You can sell and target this point. So that is the way to trade logically. But right now, there is no confirmation that the sell is going to hold because the daily is still bullish. We've been buying all this time, so the daily is still bullish. So at this point, if price come to any of these RPOI, either here, then we look for buy, go up, or if this point fail, we look for here. Remember that I told you that the extreme is always high probability, and what even make this extreme to be more probable for buy is this sweep here. You see, we have a kind of liquidity graph here, so there's high probability that price will use that extreme point, this extreme point, and go. Let's see where we are now. Let's play price. Okay, price tagged our first, and okay, that's where price is now. That is where we are currently on Euro USD. We are on our first point of interest where we'll be looking for buy. So whether this hold, go up, then we make profit, or this one fail, use this one and go up. So guys, this is how a swing trader follow the market in their time frame. So if you want to know more about how I trade, you can join my Telegram channel. I'm going to drop the link on this video, and also you can chat me up privately on Telegram. Or so to if you have any information or any question at all, you can ask in the comment section. I'll try my possible best to reply all your messages. Thank you, and see you next week. So next week you can use this to understand where market is going on Euro USD next week. If this point, then you can go to lower time frame and choose your way around, know when to enter, where to put your SL. If this is going to hold, then you are targeting here. If not, you wait for more, let it come here, then we go. So thank you guys, and see you next week.